What's up, subscribers? Welcome back to the channel. In this video, I'm going to talk about my 10 favorite dividend-paying companies. But first, if you haven't already, be sure to subscribe so that you get notifications about our future videos talking about the stock market and personal finances. So grab a cup of coffee or your favorite beverage of choice, and let's jump into it. Dividend growth investing is one of my favorite strategies whenever it comes to building a long-term portfolio, especially doing so in a tax-advantaged account like a Roth IRA. So without further ado, in no particular order, these are my 10 favorite dividend-paying companies. My first favorite dividend-paying company is Johnson & Johnson, trading under the ticker J&J. I love Johnson & Johnson because not only are they a well-known, established healthcare company, but they also have such a diverse business model that they're essentially a healthcare ETF in and of themselves. Founded in 1886, Johnson & Johnson is a dividend king, consistently growing its dividends over the past 50 years, currently sitting at 58 years of consecutive dividend growth. Currently, Johnson & Johnson is trading for around $167 per share, with a dividend yield of around 2.5%, which translates into $4.04 in dividends per year. With such a diverse and profitable business model, stellar track record, amazing financials, and not to mention all of the additional growth that is going to be coming because of their vaccine, which is nearing FDA approval, I believe that Johnson & Johnson is a must-have for any dividend growth portfolio. The second dividend company that I absolutely love is another fan favorite, and that's 3M. Much like Johnson & Johnson, 3M is a dividend king, and they have been consistently growing and paying dividends for 62 years. Founded in 1902, 3M is a consumer staple company that many investors have been very excited about this past year because of the masks that they produce that we've all had to wear because of the pandemic. And while 3M certainly did see a huge increase in revenue because of the mask sales, this is only a very small part of their business model, and they have a ton of other products, including Scotch tape, Post-it notes, just to name a few. Currently trading at around $181 per share, with a dividend yield of 3.35%, which translates to a yearly dividend of $5.88 per share, 3M is another consistent dividend payer that is going to be a staple for any dividend growth portfolio. My third favorite dividend-paying stock is none other than Realty Income, the monthly dividend company. Trading under the ticker O, like its logo implies, Realty Income is a real estate investment trust that has been consistently paying dividends every single month. Now, for the sake of time, rather than talking about why I love Realty Income so much in this video, I just made another video a few days ago where I talked about Realty Income exclusively. So I'll refer you back to that video if you want to learn more about this amazing dividend stock that I think is essential to have in any Roth IRA for the consistent cash flow that it offers. That brings us to my fourth favorite dividend-paying stock, Coca-Cola, trading under the ticker KO. Now, who doesn't know Coca-Cola? They're only the #1 beverage maker in the world and also Uncle Warren's favorite. Coca-Cola is another dividend king that has been consecutively growing and paying their dividends for the past 58 years. And at the time that I'm recording this video, over the past 1 month, Coca-Cola is in the midst of a nice pullback with a dividend yield of 3.38%. With a strong balance sheet and the fact that they're currently in the midst of a pullback, I believe that Coca-Cola is a must for any dividend growth portfolio. And on that note, let's go ahead and reveal my fifth favorite dividend-paying stock, another real estate investment trust, Crown Castle, trading under the ticker CCI. Now, when it comes to real estate investment trusts, I gotta say, Crown Castle is definitely one of my favorites, especially with the advent of 5G recently. You know those cell phone towers that you see everywhere? Well, Crown Castle is the one that owns them. They own, operate, and lease that wireless infrastructure to all of the major telecommunication companies. Crown Castle currently has a dividend yield of around 3.2%, and they have been consistently growing their dividend, typically announcing a dividend increase every October. And I don't see that trend stopping anytime in the near future. Before we reveal my last 5 favorite dividend-paying companies, if you're enjoying this video, be sure to smash that like button for the YouTube algorithm. Coming in at number 6 on the list is another favorite for all of the dividend growth investors, AT&T. Founded in 1983, AT&T is a telecommunication giant. At the time that I'm recording this video, AT&T is currently trading with a massive dividend yield of 7.2%, which comes out to be a quarterly dividend of 52 cents per share. But over the past year, AT&T share price is still down significantly. At the time that I'm recording this video, it's currently trading for around $28 per share. And there are definitely a ton of bears whenever it comes to AT&T as a company overall, citing the huge amount of debt that they're currently carrying on their balance sheet. And while I agree that the debt is definitely a risk whenever it comes to investing in AT&T, I believe that overall management has been making some nice progress over these past few quarters to pay off the debt. While I don't anticipate a ton of growth in the share price, I do believe that once we get through this pandemic, we will see AT&T share price start to recover. And in addition to that, it offers some excellent cash flow for any dividend growth portfolio. Coming in at number 7 is another one of my favorites, Microsoft. Now, Microsoft might not have the largest dividend in the world, with its current dividend paying 0.92%, but with an investment in Microsoft, you're also getting an investment in an amazing company that is going to continue to see share price appreciation for years into the future, and a dividend that I believe is also going to grow in the future as well. Microsoft's business model has benefited immensely from the work-from-home paradigm shift due to the pandemic, with Microsoft Teams and other Microsoft business products becoming a staple for any business. And this is only one aspect of Microsoft's business model. We could literally spend an entire video talking about Microsoft alone and all of the different aspects of their business. With a business model that continues to see excellent improvement each quarter in its financials and a dividend payout ratio that offers a lot of room to grow, an investment in Microsoft is one that I believe is going to not only yield appreciation on the share price, but also excellent growth in the dividend long term as well. Coming in at number 8 is another company that probably comes at no surprise, Apple. Like Microsoft, Apple is much more than just a tech company. With substantial growth each quarter in each of its products, an investment in Apple is an investment that, in my opinion, is going to continue to grow for years to come. But in addition to Apple's amazing product line and the growth that we're seeing with each of those products, the aspect of Apple's business model that I am most excited about is its service business. As Apple continues to draw more people into their ecosystem each year, the majority of the revenue that they see from their services is going to be going straight to the bottom line. And I believe that we will continue to see amazing growth in this aspect of its business for years into the future. And with a current dividend yield under 1% and a dividend payout ratio of about 25%, Apple is going to be able to continue to grow this dividend immensely in the future. Now, before we start talking about these last two stocks, full disclosure, at the time that I'm recording this video, they currently are not dividend-paying companies because due to the pandemic, they had to suspend their dividends temporarily. But despite that, I still believe that both of these companies at least deserve consideration as part of a dividend growth portfolio because I believe that there is a lot of growth ahead for both of these companies and that they will be able to bring back their dividends in the not too distant future. So with that being said, coming in at number 9, can you guess what it is? It's Disney. Now, what can I say about Disney that you probably don't already know? Founded in 1923, Disney as a company has its hand in so many different industries. From their parks to their telecommunication businesses, Disney, in my opinion, is an investment that is going to continue to see amazing growth for years into the future. And while their dividend may be temporarily suspended due to the pandemic, this is something that I foresee Disney bringing back easily at some point in the future. And in addition to that, with their new focus on streaming, I believe that Disney is going to see continued share price appreciation for years into the future. And closing out with number 10, this is a company that I was buying heavily throughout the peaks of the pandemic, WYNN Resorts, trading under the ticker WYNN. Founded in 2002 by Steve Wynn, WYNN Resorts is one of the premier luxury resorts in the world. With its primary properties located in Las Vegas, as well as Boston and Macau, China, like other companies in the travel industry, 2020 was a rough year for WYNN Resorts. In the midst of the worst moments of the pandemic, WYNN shares were actually trading down in the $40 range. And while the share price has not yet recovered completely, and WYNN continues to post losses on their most recent quarterly report, I believe it's only a matter of time before we see WYNN shares trading at around $150 or even up to $200 per share as the travel industry continues to recover overall. This is a company that I plan on staying invested in for the long term, not only for what I anticipate to be some pretty substantial share price appreciation, but also for the dividends that I believe WYNN Resorts is going to be able to return to their shareholders like they have in the past. This list of dividend-paying companies is by no means all-inclusive. There are plenty of other excellent dividend-paying companies that I didn't include in this list, but these are some of my favorites and ones that I personally wanted to talk about. If you're just getting started with dividend growth investing and not sure what you should be looking for in companies, be sure to check out the series that I did on this channel a few months back. I'll put the link to that playlist at the top of the screen right now, as well as the pinned comment down below. What are your thoughts on these dividend stocks? Are you invested in any of these companies? Are you thinking about investing in some of these companies? Or do you think that there are better dividend-paying stocks out there? Be sure to comment down below and let me know what you think. And while you're down there, if there are any other stocks or topics that you would like me to talk about in a future video, please feel free to comment that down below as well. As a reminder, this video is for entertainment purposes only. I am not a certified financial planner. I'm a resident physician with an interest in personal finances and investing. Please make sure you're doing your own research before you make any financial decisions. And please be sure to smash that like button and click on the subscribe button for the YouTube algorithm and to help support my channel. Thanks everyone. Have a great day.